Hey my fellow investors, this is Julius with another video of investing. So before I get into this video, I want to first let you know that I'm not a financial advisor. So any information that I provide to you in this video is for information purposes only. So before you invest your money, please either do your own research or seek professional help, because at the end of the day you are responsible for your own investment decisions that you make. Another point that I want to pass on before I get into the video is that I need new subscribers. So please, before we move on, hit the red button below so you can subscribe to this channel, and by doing so you won't miss any of my videos that I post weekly. Now that I've got that out of the way, I want to talk about realty income and why I own it, and why I'm planning to make this my biggest holding when it comes to single stocks. Now, realty income is one of the best, if not the best, blue chip in the REIT sector, and also one of the most undervalued REIT at this time. You have to understand that realty income is one of the highest quality blue chip REITs in the world. And why do I say that? First, it has an A-rated balance sheet. It owns Class A net lease properties, and its tenants are some of the strongest. And what I mean by this, if you take a look at the tenants of realty income, we have Walmart, Walgreens, we have a Dollar General, FedEx, Home Depot, and the list goes on. This REIT also has a 50 billion enterprise value. It also generates 12.2 annual average returns since its inception. It has grown its dividend for 25 plus years in a row, and yet realty income is one of the most discounted REITs in today's market. Now, although realty income is trading at around $70, actually I believe it's actually less than $70 as of today, I estimate its fair value to be over $100 in the near future, and here's why. For me to come up with a better valuation of why I think this stock should be trading at more than $100 per share, I'm going to break down this video in two parts. One part is why I believe this stock is discounted, and two, what are some of the reasons that we may be able to realize the upside. Now, if you remember right before the crisis began, and what I mean by that is the pandemic last year, realty income was trading at around $83 per share, right? Now the question is, why does it trade at $70 per share today? Now, despite having all the characteristics of a blue chip REIT, if we take a look at A-rated balance sheet, steady growth, growing cash flow, superb track record, the market is pessimistic about realty income. Now, this is because most of its properties are retail based, and Amazon is supposedly killing retail sectors. Now, when the market hears the word retail, it runs for the exit. Now, honestly, I think this is a mistake due to two reasons. Now, first, investors underestimate the resilience of triple net lease properties, which are very different from your average retail properties. Net lease properties enjoy a 10-year plus leases. At the same time, they have a preset annual rent increases. They also have no landlord responsibilities. At the same time, they have a high rent coverage. Secondly, not all retail is created equally, because realty income mostly owns properties with the Walgreens, pharmacies, Dollar General stores, LA Fitness, and the list goes on. And if you look at the list that I've mentioned, you can see that these are services, value, and experience-oriented retail categories that are resilient to recession and e-commerce. And when you combine resilient retail with the net lease structure, you get a highly predictable and stable cash flow. Now, analyzing all the points I've made, you can see why this stock may be undervalued. Now, let's look at why, or some of the reasons why I believe the stock is going to rise over $100 in the near future. Now, there are two clear reasons to realize this upside. The first one is the end of the pandemic, because right now we are vaccinating over 3 million people each day, and at this pace we should reach herd immunity in a few months from now. Now, this will allow all businesses to reopen and COVID restrictions to be lifted. Now, in fact, most businesses, as I speak today, have already started opening, with just a few still taking extra precautions. But overall, most businesses owned by realty income are beginning to open up. Now, as the economy stabilizes, this is going to give a nice boost to all retail categories and improve the market sentiment of realty income. The second reason why I think this stock is going to rise to over 100 is the low interest. Now, the Fed has made it clear that interest rates will remain near 0% until at least 2023. Now, if you can remember, back in 2008, it took 5 years plus for interest to raise again post 2008 recession. And the Fed then failed to normalize increased rates. Now, I think that it will be even harder this time due to the higher leverage in the economy and the economy destruction caused by the pandemic. Now, when the market realizes that we are in an environment for lower rate for a long time, bond practices like realty income will become increasingly popular. Now, if all these things happen, which I expect will happen, it's a matter of time, then it's going to be a question of time before realty income reprices at closer to $100 per share. Now, the bottom line is, in my humble opinion, okay, this is my humble opinion. Like I told you, I'm not a financial advisor. When it comes to rates, realty income is a buy, and I believe very soon it will be selling at over $100. I believe that the market has greatly underestimated the strength of realty income. Now, if you agree and like the content and you think realty income is a buy right now, don't forget to hit smash the like button and also consider subscribing by hitting the red button below. It's gonna take you just 1 second, but will mean a lot. And if you don't agree with my assessment of this company, just leave your comment below with what you think and what you think about this company. But one important thing I want you guys to remember, right? At the end of the day, you need to invest. And also remember, the best time to invest was yesterday, and the second best to invest is today. Now, the longer you stay not invested in the stock market or invested in general, the longer you are losing money. And I know most of you think keeping your money in your banks, you are saving. But at the end of the day, I've talked about inflation and how inflation works and how money loses value due to inflation. Anyway, thank you so much for watching this video. I hope you like the content. Please leave a comment below with what you think. Don't forget to subscribe and join the journey of investing. Thank you. See you next time.